Grovich, with American Federal Coin and Bullion, a published author and a familiar voice here on Money Radio, the host of Good as Gold every Thursday from 1 to 2. Nick, good afternoon.
Hello, Sinclair. Nice
Good
to be
afternoon.
here.
Good morning.
Good morning.
Yeah, I was thinking about your show Thursday afternoon.
Right. We're more used to saying afternoon.
I have been saying that for a long time. Let's talk about what's been going on in the metals markets with prices dropping down to lows, and we seem to be forming a bottom here, because I just don't know that they'll go that much lower, but I say that, there's a bounce up and then it drops right back down again.
Yeah, see, it seems like we were here just a few months ago talking about the same thing. Gold was down to 1,080, and we said we might see a run up to 1,200, which we had, and
Which
people
we did,
people
yeah.
jumped in at 1,200 thinking it was ready to run, then we came right back down to 1,080.
Which is pretty much a low, roughly a 6-year low. We're forming a long-term base here.
Yes, we are. And it could dip a little bit more, nobody knows, but it seems like it's forming a good base. And as you know, the paper price of gold's a little different than what's happening. You know, the ETFs, you see a big sell-off in gold in the ETFs, but we see a lot of physical buying going on in the actual physical gold market, the market I deal in.
And that's the market that most people deal in, unless they're just trading some paper products.
Right.
Which really don't have a whole heck of a lot to do with the actual metal.
Right, that's right.
Unless you're holding physical delivery, it really is just a paper product that is a derivative of a derivative.
Right, you're basically just gambling. You're gambling on the price of gold short term, and you know, for some people they want to trade in and out. That's not a bad way to go. But most of my clients want to have a little gold stuck away for a rainy day. They want to have an asset that's going to be worth something as the dollar devalues someday, and that's why they're buying gold. But they need the physical gold. That piece of paper under your pillow is not going to help you out if you need it.
And when we see the price move up, we see some people kind of jumping on with the paper.
Right.
But I think what we see among the physical buyers is they like to buy when the price is low.
They do. They like to buy when the price is low. We see a lot of buying. The U.S. Mint makes the U.S. Gold Eagles, and
Sure.
demand from the Mint is the highest it's been in 5 years. They sold nearly 400,000 ounces of gold in 1 month. There's a lot of gold for the Mint to come up with. That's about double what it was a year ago.
That really is a lot.
So
That's
that's quite an increase, and yet gold's lower, but the demand is twice as much as it was a year ago.
Now, the interesting thing there, though, is that that's the highest demand that we've seen for physical gold, at least in the U.S. Gold Eagle coin sales,
Right.
since going back to 2009, again.
Right.
Which is when we had that last low price. So low price, high demand. The low price matches that base that we're forming from 2009.
Right.
Meanwhile, we're peaking out on demand, just like in 2009.
Exactly. We're seeing the exact same thing happen. The thing about paper trading that's so different, you know, last week when I was looking at the 10,000 or 1,080 mark, a lot of program buying and selling goes in at certain price levels. So the paper trades, to a great degree, are really affected by the pre-destined or the preset trading levels. The computers automatically buy at certain support levels or sell at certain
It's
support
kind of
levels.
algorithmic trading more than anything else.
Right. So we have program trading that really affects the paper trade, that doesn't really affect the physical trade that much. Does that make sense?
I think so. I'll try and sort it out, but I think it makes sense.
Well, you know what I'm saying is that you look at the spot price of gold, and that's more based on what's happening in paper, in the futures contracts,
Right.
the ETFs. And a lot of that really isn't based on people actually buying and selling. It's based on a computer program that says you buy at a certain point, you put in your stop loss at a certain point, and
Sure.
it almost creates the price that's being reported.
Now that you've explained it, it does make sense. Because really, we're seeing tremendous demand for physical gold right now. It's a little overwhelming at times. You look at some of these numbers, U.S. retail investment demand jumped 32 tons. That's more than a 200% increase year over year on demand.
Right, and the central
Price
banks
didn't
have
go
been.
up 200%, that's for sure.
No, that's for darn sure.
Normally, we think of price and supply, supply and demand moving price.
Right.
Okay, that hasn't been the way it's gone though in physical metals markets.
And it is crazy how the paper price of gold really controls the market, as opposed to the physical metal that's trading hands. The central banks have increased their buying by 175 tons. So the central banks are picking up gold at these prices. Investors seem to be picking up gold at these prices, yet if you look at the spot price of gold, it's still very low.
Why are all these central banks and investors picking up physical gold now? Is it just a simple story of diversification?
That's a real good question. Most central banks will tell you gold is a relic of the past, and yet when it gets down in price, they all want to stock up on it. It doesn't back their currency, but it's a reserve asset.
And it seems as if a lot of the currencies are in a race to the bottom.
Yeah, they can't devalue them fast enough. The dollar's strong because the other currencies are so weak. The euro, they're trying like heck to get to devalue the euro to get the economy going. And of course that props up the dollar, and most of the time that hurts gold, although again, we've been seeing the dollar and gold move lockstep lately. The dollar's down, gold's down, the dollar's up, gold's up.
Which is unusual.
Which is very unusual, very unusual.
So at this point, my head is just spinning. I don't know what to make of any of these markets at all.
It's hard to outguess what the market's gonna do. You know, we were here before, and you know, we said we thought it was a good time to maybe start picking up a little gold. And then it ran up to $1,200, and nobody knew if it was going up from there or down from there. So now we're back at 1,080 last week. It's hard to tell. There's, you know, you can find someone who says gold's doing anything you want. You can find people who say it's going to 750, and you can find people, I think Jim Sinclair is saying it's going to $50,000 an ounce. So you can find some pretty big extremes out there right now.
Yeah, stick around. We'll try and make some sense of this all and what it means for a typical investor in the metals markets as we continue our conversation with Nick Grovich from American Federal Rare Coin and Bullion. The website is americanfederal.com, americanfederal.com, and the phone number 800-221-7694, 800-221-7694. More with Nick Grovich in just a moment. In case you're just joining us, I'm Sinclair Noe, and you're listening to a special Monday edition of Mastering Money. Steve George will be back with us in a few minutes. In studio with me now is published author and one of the nation's leading precious metals experts, Nick Grovich, the host of Good as Gold here on Money Radio every Thursday afternoon at 1 o'clock. Nick, we've been trying to make some sense of this metals market, and we mentioned how prices dropped down again, yet demand has been skyrocketing on that news.
Right.
You would think the demand would push the price higher. We haven't really seen it yet, but there's got to be some real shortages developing. We were talking about the gold eagles and all that the U.S. Mint has been selling lately. Are you starting to see shortages, and what's happening with the premiums on these coins?
Well, right now the premiums actually are fairly stable, which is really good news. A lot of times, as we've talked about before on the silver, a lot of times when the spot price drops, the premium goes up quite a bit.
Right.
On gold right now, the premiums are in normal trading ranges, so that's really good for people that are looking to buy. They're not overpaying for the gold right now. They're getting the benefits of the low price. There are many times where the price will drop and the premium will double or triple. So, you know, people aren't really paying for gold, paying the current price of gold. They're paying $100 too much or $200 too much. So that's a really good thing. And you know, the thing about the gold market right now, you know, a lot of people just think, well, it's the doom and gloomers buying gold. But when you see the central banks backing up the trucks and buying hundreds of millions of ounces of gold, something more is going on under the surface. Unfortunately, I can't tell you what all that is. But, you know, as they
We
devalue their
certainly
currency,
speculate.
yeah,
But we don't know.
right.
I wish I did, but quite frankly, we just don't. Maybe it's the threat of inflation, maybe it's something else. But you're right, the central banks are loading up right now, it looks like.
They are, and for a long time, the central banks were net sellers of gold. Right now, they're adding to their inventories. China's been buying gold. China's one of the world's biggest buyers. China and India are the two biggest buyers. The
People's Bank of China has
People's Bank of
really
China.
been backing up the truck.
They, I think they're saying they have over 1,600 tons of gold stored now, which makes them number 6 in the world. So China's one of the big buyers, and you have to wonder why they're buying all this gold. But I think part of it is everyone's devaluing their currency so much that they want a backup plan, just like us crazy gold bugs. We want a little something real stuck, under our pillows.
In case the devaluation goes a little further than
Yeah.
expected, they've got some metals behind it
They've got something with real value there.
that they could always pull out if it starts to slip away from them.
Exactly.
That makes as good a sense as anything I've heard. I mean, it really does. I wish I had a better explanation, but that's as good a reason as any. It's a hedge, it's insurance, which has been a traditional role of precious metals over the years.
Right, and if you're devaluing your currency and your currency is becoming worth less and less, what do you spend at some point when your currency's not worth anything? You spend your gold.
Yeah.
I mean, it's an extreme example for a central bank.
There's always a certain amount of value in the gold and
Right,
precious metals.
right. I mean, a lot of countries turn to their gold reserves when they need money for their social programs or when they're short for paying for any type of expenses. A lot of times they'll turn to their gold reserves and sell off, and that happened a lot during the 2000s in the first 10 years.
What are you seeing in the silver markets right now with regards to supply and availability?
Supply is a little spotty. The mint's finally caught up a little bit. Premiums on the silver eagles and silver maple leafs have come back to normal. I'm a little concerned about it because we're getting to that time of year where the mint shuts down to start producing next year's coins. So we have a little window, I'd say, from the beginning of November, maybe until the first week, maybe second week of December, where there should be a decent supply. But for a couple of weeks we had plenty of coins, and in a matter of weeks, I mean literally a couple of weeks, most of what the mint supplied to the dealers has been sold. So we could be going back to one of those areas that we've been in all summer where you're paying huge premiums and waiting months to get delivery of silver. But right now it's actually available, so it is a good time to be picking up silver.
Now, we work our way over to platinum, and we talk about how metals markets really are small.
Right.
Gold, silver, and then platinum is a really small physical market.
It's a tiny physical market, and so little of the platinum they mine goes into investor hands. As you know, I love platinum. It hasn't treated me right lately, but I'm just surprised by the price of platinum. You get down around $900 or even under $900, and you start wondering how they can even produce platinum.
Well, they're not, are they?
They've really cut back in South Africa, where most of the platinum comes from. They've cut back tremendously on production. They're also going into a drought, and it takes a lot of water to produce platinum, so that could hurt the platinum supply. We've had strikes, we've had mine collapses, mine closures, and still platinum's right around $900 or slightly less. I guess it's just the industrial users have what they need right now. So there's not an extra demand for it pushing the price up, but should they need a little extra, if any of these economies like China starts picking up at all, I don't know where they're going to find the extra material. I don't know where they find the extra platinum group metals.
And then I heard recently, we keep hearing about some of these big miners, Glencore, Lonmin, I think is a major.
Out of South Africa.
Yeah, and they're doing a complete restructuring now.
Right. They're using this time to restructure. They've closed down some of their deep mines, or they're basically going to try out strip mining. And of course, they've got a version of the EPA in South Africa also, so they're up against the wall there as far as restructuring.
Can you still get platinum coins?
We can still get platinum. It's, you know, when you think about platinum and gold both being precious metals, and you think about how much gold you can buy on a day, I mean, I can buy 1,000 or 2,000 ounces of gold in a matter of minutes.
Right.
And it's not really a problem. I can have it delivered in a matter of a couple days. With platinum, it's really hard to buy, whether it's bars or coins or well, bars or coins, it's really hard to buy any quantity. Like I said, with gold, 100, 200, 1,000 ounces is not a big deal. With platinum, it's hard to even buy a couple hundred ounces. I tried to buy a few hundred ounces a couple weeks ago. I had to call 3 different suppliers. One had 74 ounces, one had 70 ounces, one had 30 ounces. I mean, it's, those are tiny, tiny amounts when you think about the worldwide market for platinum.
Yeah.
To be able to buy less than 100 ounces at a crack is really kind of ridiculous.
It really is. You would.
I mean, it's a tiny, tiny amount.
Yeah, I mean, you're talking the price of platinum under $1,000.
Right, right.
That's not a huge purchase.
Well, you would think if it was readily available, you could buy 1,000 ounces of platinum.
So we're starting to see some real shortfalls, some real
We are.
demand problems.
And platinum,
Supply and demand
platinum's
problems.
probably my favorite precious metal right now. And I don't think it's gonna turn around tomorrow, but I think when platinum turns around, I think it's gonna be a very big move because they really just have no way to increase the supply of platinum.
You've been doing a lot of workshops lately. You were at Financial Fest
Right.
The past weekend. What are some of the questions that people are asking of you, and what are their concerns? I mean, are they looking at the low prices in the metals markets now and saying, oh my, the bottom's falling out, or are they looking, saying, oh my, this is a good buying opportunity?
You know, I get some of both, but unfortunately, when prices drop, people tend to sit back and think they have a lot of time to wait. Well, the price is down, I'll wait and see what happens tomorrow. I'll wait till the day after. So people tend to procrastinate when the prices are down. And then the minute the prices start moving, they want to jump on board and buy. But there's, you know, there's a lot of people that, you know, probably the more seasoned buyers tend to just realize when the prices are low, they jump in and they buy. I do see a lot more first-time buyers getting in the market right now. I see a lot of people asking questions about what types of gold to buy, what's the best way to go. You know, asking a lot more basic questions about, you know, gold coins or gold bars, that type of thing. So I do see a lot of newcomers to the market, which I find very interesting.
Well, whether you're a newcomer or you're a seasoned veteran at this, it's always an intriguing market.
Right.
I mean, I've been following the markets for years, you have as well, and sometimes I think both of us look at these markets and we kind of scratch our heads a little bit and go, what is this?
Yeah, and that's how it's been most of this year has been like that.
And I guess that's one reason why it's always nice to have physical possession of just some basic bullion coin in your vault.
It's nice to have something that somebody can't take away from you, can't wipe out on the computer. I mean, your computer hacker can't touch the gold that's in your safe. It's something you own, you control, you have total control over it. You know, it's really interesting when I get someone who's never bought gold before and they hold an ounce of gold in their hand for the first time.
Something changes.
Yes.
I know. American Federal Rare Coin and Bullion. AmericanFederal.com. That's the website. AmericanFederal.com. The phone number, 800-221-7694. 800-221-7694. Be sure and listen to Good as Gold, Thursdays, 1 o'clock here on Money Radio. If you have questions for Nick, you're not going to find anybody more knowledgeable in the markets than Nick Grovich. And he can answer your questions at American Federal Rare Coin and Bullion, located in Carefree, Arizona. Nick, it's always a pleasure. Thank you, sir.
Thanks so much.